This is our second meeting for this year. I also welcome Mr. Narayan Krishnamohan, our MD, and Narendranath Baliga, our Chief Financial Officer, to this analyst meeting. Due to the current COVID restrictions, we have done as a hybrid mode, so we have majority of the people virtually joining us. And there are some of us, our key stakeholders are in the room. So we are following all the relevant COVID protocols, in terms of distancing. For all the participants who are there, this meeting has been recorded, so you've already got this. And the audio-visual recording of this meeting, along with the presentation and the meeting transcript after the meeting is over, will be uploaded on the website and also on the stock exchange site. Some brief points that I would like to just mention. I think all of you are kept on mute mode, the participants who are virtually. This is to make sure that there is no background noise. During the question and answer session, we will have people who are joining virtually, their names will be called out and they will be unmuted. There are some people also in the room, so we will have this kind of mix one where we will give chance to everyone to ask questions. So make a good opportunity, good use of this session. For those who would like to ask questions, those who have not registered but would like to ask questions, you can just click the raise hand icon on the right hand bottom of the WebEx page, and then we will give you an opportunity to speak. Request all the speakers to be brief when asking questions, and wish this session is quite informative for all of you. So I request Narayan Krishnamohan and Mr. Baliga to give a brief presentation. We have a small presentation where we take you through the financials for FY 21-22 and some related topics around what's happening in the BASF. So Mohan, over to you.
Thanks, Manor. Good afternoon to everyone. Pleasure to be here and talk to you again. The last time we did not have a presentation. I just spoke off the cuff, but today we have a few slides, and like always, happy to answer any of the questions you have later. So I was asking our team that what what do you want to put as a visual? I mean, usually we put some CSR visuals, and then my team came up with this after a short discussion. And what I really want to say here is it's been challenging times over the last year, and you will see it running through the presentation as well, whether it is supply chain, whether it is topics now related to inflation, rising input costs. So there have been a fair amount of challenges from an environment perspective. Okay. However, I think the team has really managed to work together well with our customers, with our partners, and the results have been fairly good. And I think we've scaled new heights over the course of the last couple of years, which is why I thought that it's a very apt picture for us. Now that said, I mean, it's for you to judge and decide whether it's good enough or not, but I thought I explained why I put the picture over there. This customary thing, no forward-looking statements, only matters in public domain can be discussed, and we do not provide forecasts, so please don't ask me how this quarter is looking. I will not be able to say anything. So for future results, like I said, we would not be commenting on it. But at the same time, I would try to answer within the purview of the law how much I can give you information and be open about what I think the business is doing. Firstly, from a safety perspective, we've done well. The last few years have been very good in the context of operations. The two lost time incidents that you see there are totally non-work related. So one was a guy standing at a bus stop, got hit by a bike, I mean, nothing you can do about it but we report these things, so that's why you have that. And another guy was at a celebration and of a retirement, and he fell and injured his elbow. So from a work-related perspective, touch wood, we haven't had any incidents. We take utmost care in there, and I just hope that we can continue to keep, not just hope, I mean, we do our best to make sure that we keep the incidents at the lowest. We have very high rates of reporting in the context of risks and so on. So I think those risk mitigation measures, the audits that we do, voluntary audits, both internal audits, our own global safety teams audit our sites and offices. And of course, we have also had the Indian Chemical Council come and audit a few of our sites in terms of safety processes. So overall, the effort is good, and which is why you see the positive results from a safety perspective. Coming to COVID, I mean, I don't dwell much on the overall situation. I mean, the cases are rising in the country. Today, as of today in BASF India, we have one active case. Again, it's one of those mild cases where the employee is home quarantined. We have now, again, as we did last year, provided vaccinations for our employees. So now most of them are due for a booster in June. I think next week we will have a camp at our site for employees and their families. So that's part of our initiative to make sure that all our sites and offices people are fully vaccinated, and that allows us then to. I mean, we have low risks. I think with the vaccine, we believe in that, and that's something the company supports. Now, coming to a little bit on the environment that we are in. So, if I take the top three things on my mind, which actually not sleepless nights, but keeps me worried, is what's happening from the geopolitical perspective, what's happening and the consequences of what's happening with Russia and Ukraine. I put COVID-19 here, and I put COVID-19 not just from an India perspective, but what happened to the supply chains with China undergoing total lockdown, which has broken down several parts of supply chain, not just for us, but also for our customers. I mean, I saw this picture of all the chemical tankers which are outside the port of Tianjin and Shanghai waiting for a berthing slot. I mean, this is unbelievable. And the kind of delays that one can see as a consequence in supply chain. So your planning horizon has to be a lot longer. And this is where we are trying our best to mitigate those challenges. I mean, what I mentioned here as a consequence, the supply chain disruptions we have, it is largely not because we don't have the product, but even if we have a product, to get space on the shipping vessels and to get them into India is very much a challenge. I really thank my team that despite all this, our numbers the last several quarters, we have consistently shown volume growth. And that's clearly coming from how we are mitigating those challenges. Now, the geopolitics obviously has some impact on oil prices, as all of us know, and I think that's driving inflation. And I mean, it's been going on for the last few quarters, but now you can see that quite pronounced. Oil above 120. Eventually central banks doing the right thing of raising interest rates, but obviously this has an impact of the last several years where we had basically growth driven by excess liquidity, and I think the consequences of this we will see towards the second half of the year, where the rising interest rates, I mean, the US has already signaled, the UK did, I mean, yesterday was it, the EU also more or less indicated that every month for the rest of the year they will raise interest rates by 0.25 or whatever, 25 basis points. So all this points clearly to challenges and the paradigm that we had over the last couple of years, where there was sufficient liquidity, at least in the market, done by various governments to counter the challenges of COVID. that's going to reverse. And that does have an impact on, if I may call it, even individual capital purchases, whether it is houses, whether it is cars. I think there will be impact because suddenly your EMIs are going to be a little bit more expensive than what they were 3 months ago. So the borderline people will have probably different decisions. Now, that said, on the left side, if I go into the individual industries, I mean the chip shortages which were there, I think the problems in China, where I think in the city of Shanghai, they didn't sell a single car in the month of April, helped that there were more chips available for other parts of the world. So you see the chip shortage is kind of, it's still there, but it's a better situation than what it was when I last spoke to you. Also, the sales in the country is improving, and you see a momentum there. And now how that pans out with interest rates rising is something which we have to observe. Construction still a positive momentum, both in infrastructure as well as residential, commercial apartments and offices and so on. We see positive momentum there. The most important thing all of us are waiting for is the monsoon, which initially we got a feeling that, well, monsoon is early, it has already arrived in the country, but then there seems to be, like last year again, a gap. And now, I mean, every day I'm trying to read what the IMD is saying, and I think they don't know that they are saying some things, but now I'm told that in 2 days it should arrive in Maharashtra. I mean, we're really looking forward to it. So far, the people from the industry say that it was good that we didn't have a few days where they start sowing and then a stoppage. So the sowing hasn't really started in a large extent. So in that context, if the delay of a week or so is not material, and still people are generally expecting that for the season we will still be above long-term average, and as a consequence there is a let's say positive expectation, and clearly that is important for industry and from a demand perspective, because the expectation is that rural demand, which whether it's FMCG, which in the last couple of months I'm hearing negative from an FMCG perspective, that demand from rural area is not as strong as what it was some time ago, and the hope and expectation is with a good solid monsoon, this revives. So I think not just we as a company, but also the country kind of needs a good monsoon to come in, kick in pretty soon. Like I said, the FMCG part, there is the inflationary impact is there on growth. And lastly, on the chemical sector, I think the chemical sector has done well the last couple of years, whether it was specialty chemicals or the upstream commodities. However, now you are in a situation where there is a margin squeeze. So the oil continues to rise, whereas there, from a demand perspective, there seems to be a cap on what you can do on downstream pricing. So it's a classical case of a margin squeeze happening in the middle chemical segments. So that's more or less what we see as the key drivers for the next few months and quarters. What we are doing from an internal perspective, organizational perspective, is ensuring that we increase our planning horizon for the supply chain topics. We are dealing with rising input costs, so wherever we can pass on the increase in material costs, we are doing that pretty consequently, thereby kind of protecting margins. What we also focus on is what we can do with customers in the context of new products and solutions to make sure that we have a sustained growth story coming in from various product lines in the market. Now, Before I hand over to Naren, I just wanted to put this slide up. Actually, I borrowed it from Naren. He made this slide. That how have we done over the last 3 years during the COVID time, and how we have performed. I mean, there is some element of seasonality in our business with the influence of ag. But if you look at the upper part of the slide, which is about sales and revenues, you see we have consistently grown from being somewhere around 7.5 crores to about 13 crores in 21-22, and it has been consistent growth across quarters, and you can see every year for the corresponding quarter we have done better than the previous year, and it's been remarkable in my opinion in the situation that we are in. It's been a combination of pricing and volumes. So we've had growth coming from both pricing and volumes, and especially the volumes in challenging environment, like for example, automotive production, and we have significant exposure to automotives. Automotive production in this country hasn't grown in the last 3 years. It's been stagnant. It went down in 2019 and 20 because of the upcoming change in laws and then COVID. But despite that, we've grown our business also in the automotive sector, and we've grown in ag and chemicals and so on. So it's been a combination of both volume and pricing growth. Now, I remember the first time I had this analyst meet about a couple of years ago, where our margins were truly unsatisfactory. I accepted your criticism and said that we're going to work on that. I mean, it's going to be profitable growth and not just top line growth for us. And you can see, I mean, we've come a long way from there, and we are consistently delivering reasonable numbers, having grown to about 750 crores in the last financial year. So clearly, the focus on, I mean, you remember at the end, I will show you the slide again, which I showed the first time, that what are our focus, the basic business principles where we focused on. And I think focusing on costs, margins, volumes, that has enabled us to deliver these results. And like I said at the beginning, the chemical industry has done well the last couple of years. But even then, I think these results, I mean, great credit to our team at BASF, which has delivered these excellent results. So with this, I will pass it to Naren. He has a few financial details he would like to discuss with you.
Thanks, Mohan. Good afternoon, everyone. I'm Naren Balika. I'll be taking you through some of the numbers that we have put together to drill down what Mohan already showed for the 3 years. Here we are focusing on financial year 22, which is the year under discussion now. And Mohan showed for the last 3 years on a quarterly basis how we have grown. And the key point there was for the last 3 quarters, we have a 3,300 plus kind of sales for the last 3 quarters in this financial year. So this is the segment breakup now of that financial year 22. Usually the question comes up, how much is the agricultural solution? Yeah, it used to be a pretty big percentage earlier. Over a period, it has come down, not in aggregate value. Value has been growing, but other segments have been growing, and then agriculture solution now is 12% of the total business. Well spread out, and like Mohan said, doing well, and hope to do similarly in the coming years. Materials is the biggest one now, with both performance materials and monomers contributing to that. That's around 27%, followed by chemicals and others. Chemicals and nutrition and care, which we will drill down as we go to the next slide. This is showing how the 9,500 crores became 13,000 crores from financial year 21 to financial year 22. Yeah. So hope you're able to see the slide now. 9,500 crores becoming 13,100 crores. And before I dive into the materials one, because that stands out there, the 1,300 crore increase. Before I go to that, I want to highlight that for agricultural solution,
It was a fantastic year, financial year 21, of 1,400 crores, and they have added 100 crores to that. So though the 100 crore looks like a small addition, last year was an exceptionally good year, and on that they have built another good year with 100 crores additional sales. Similarly, for nutrition and care, during the first year of COVID, we registered a 2,300 crore. It suddenly became a major segment for us, and over and above that, 170 crores added to make around 2,500 crores for the current financial year. Materials, of course, stands out, 1,300 crore. This is the biggest one now for us, with a 60% increase over last year, followed by industrial solutions and chemicals. Like Mohan said, he has been focusing on the profitable growth, and not just the growth of the top line, but also focus on the bottom line in terms of getting margins right, and also controlling the fixed cost. So that is what I wanted to show in the next slide for the profit before tax, before exceptional item. And those who follow us know that in the last few years we had a couple of big exceptional items. So we always make it a point to keep that out and show only the operational profit. And this is PBT before exceptional items. And this is by segments. Again, materials stand out, more than 100% increase, from 143 times increase to 370 crores of profit before tax. And again, the same holds good for agricultural solution. What I said for the sales, it's a 4 crore lower profitability, but at the same time, we had to see it was 111 crores last year, and on that a small decrease of 4 crores. Agricultural solution continues to do extremely well. The same I cannot say about nutrition and care. Probably you can ask that to Mohan, and he can answer what's happening there and what we are focusing on. Nutrition and care has lower profitability, lower margins. They have some issues with regard to product availability also. That also is impacting them. But at the same time, should not be an excuse to have a lower profit than last year when sales are doing good. So that we can discuss later. Materials, I already talked about. Industrial solution is another unit which is contributing 67 crores higher than last year, 70% increase. And you can see other contribution from chemicals and surface technologies. Surface technology happens to be one of our smallest segments with around 500 crore sales. And the only the plus point this time is a lower loss. Yeah? Last time it was a 50 crore loss, and this time it's a little lower. And we don't have construction chemicals with us anymore. Yeah? By June 30, 2020, we divested the construction chemicals. So that was a profitable business. That's not there anymore. And that used to contribute around 500 crores sales. So that's not included here. Coming to the next slide, kind of a busy slide, but I'll take you through that. One on the top left is revenue. Yeah? What Mohan had showed is for the last 3 years. Here I show for the last 5 years to see how we have grown from 2018 financial year to 22 financial year. It's a CAGR of 24%, which is kind of incredible, despite the disruptions that we faced and which Mohan explained in terms of supply chain disruption, COVID disruption, inflation, crude oil prices, all that. Still very good growth in sales, contributed both by volume and prices. Yeah, volume for us was around 15 to 20% higher, and prices were 20-25% higher on an average across the business units. So we landed up with 13,100 crores sales. Coming to EBIT before exceptional item, 18-19 was an aberration here. We had big issues on input cost. The crude MDI prices were falling, and in the falling market we had to manage our profitability, and that's the reason why you see that 31 crore profit there. As compared to that, 2021, which is the first full year of COVID for us, yeah, March 2020 COVID started, and this happens to be the first COVID year. It was a fantastic 475 crore EBIT before exceptional item, followed by this year of 765 crores. I think if we don't move it goes away. So 765 crore is the current EBIT for financial year 22, which is a ROCE of 36%. really very high. And like Mohan said, all analysts used to ask him, when are we going to improve it? Yeah? And then he had taken it over in 2019, when we were at one of the lowest ROCE ever at 1.4%. And then the numbers are evident here, what happened and how it happened. Net working capital, the lower chart now on the left, this is in crores. 800 to 900 crores is what we used to trend for a long time. And this is net working capital, which means receivables plus inventory minus payables. And even after the change of our business model, we managed to keep the inventory low. And so the net working capital was around 800, 850 crores. And now it's slightly higher at 1,000 crores. That is reflecting the 13,000 crore sales. Yeah? Against that, a net working capital of 1,000 crores. So as a percentage of sales, it's around 8%. And if you ask a CAGR across, it is 7%. So to compare, for a 24% increase in CAGR sales, it's a 7% increase in net working capital over that same period of 5 years. Very much under control, and we can cover that in the later slide also. Debt equity ratio, we have been repaying our debts, and there was one external commercial borrowing which we had borrowed for our Dahej plant, 1,000 crore plus, and then that has been repaid, and now we have actually zero debt. And very well managed capital situation, I would say. We knew the interest rates are going to go up, and before that we wanted to come to a situation where we say interest cost does not directly impact us going forward, at least for the time being. Some key performance indicators: operating expenses are down by 1%, and that would mean on a sale of 13,000 crore, 130 crores saved straight away on the operating expenses. So that's a big contributor. Well, very good control on the costs. EBIT at 5.8%. Already last year it was good at 5%, and that has been improved with 80 basis points, 5.8% increase percentage this year. Earning per share before exceptional item, again 135 rupees, and after exceptional items it's 137 rupees. That's what you see in some of the publication. That's after exceptional item, but before exceptional item EPS is 135. Again, compared to last year, significant improvement, more than double EPS. And last year I thought is already a good year, very respectable year was last year, and then we improved on that by doubling the EPS. ROCE 36% as compared to 25% of last year. Again, it's almost like earning 1/3 of our capital employed every year. So in 3 years, we earn the entire capital out. So that has been a good year, and hope we continue to do well going forward. Debt equity ratio, no debt, so not applicable. Receivable days at 65 days. We have around 300 crores of overdues at any point of time, which is very well managed, I would say. It happens to be around 8% of the account receivables. So that is how we track the receivables. Inventory days, again, around 60 days, 58 days of inventory. Very tight situation, I would say. Mohan was talking about the supply chain disruption and all. And we have significant imports. We are import dependent, all said and done. To have 60-day inventory, which is raw material plus finished goods plus packing, everything together. That's kind of a tight inventory, if you ask me. Cash from operations, the last item on this chart. From around 500 crores, we came down to 330 crores, 150 crores less than last year. And that is mainly to build up the working capital. Yeah, so some of our inventory increased to ensure the supply is not disrupted for the customers, and that was taken out of this. So cash from operations is kind of lower than last year, but hopefully we will continue to earn that 500 crores back. From operations is 330 crores, and we have investment in plant and machinery, another 120 crore, what we call cash for investments, and cash flow for financing activities is around 250 crores. That is for repayment of loan and interest and other things. Some quick comments on the capacity building exercise that we have been doing in the last year. The first one on the left is the Dahej plant, and the capacity has been doubled from 45 KT. We have increased it by another 45 KT, and as we speak now, the commercial production is ongoing, and hopefully they'll be able to cut the first commercial invoice anytime now. So the capacity is increased, and this is in Dahej, 45 KT additional. The ultramid polyamide capacity in Panoli, this is a site we acquired from Solvay. That was the business which we acquired. And there we are increasing the capacity by around 30% by the end of this year. The production will start from by the end of this year. Application lab for automotive coating. This is in our Mangalore plant. This is to provide innovative solutions to our customers globally. And we have this application lab in Mangalore, which is recently inaugurated. And you see the picture of our guys who were proud to have that center here established in Mangalore and expanded. Yeah? This provides a lot of innovative solutions for coating solutions globally. And the last item is the focus. So this is the Thane plant, focus on conserving water and also reducing the greenhouse gas emission. So all plants are contributing towards this. And with this, I hand over to Mohan to explain the impact of the macroeconomics and also what are his focus areas. And so to say, Mohan, it looks like the same slide you presented last two times.
So last 2 years.
Last 2 years.
And I remember our first conversation back in Feb 2020, where I said, my years of experience tells me these are the things which you have to do. These are the things that we have to work on. So on the operational side, the top line growth, we continue to work with our customers. The focus on projects, new products for customers is very high. I myself have been, just giving an example, there are many others as well, but in the last couple of months, launching new products for the ag. So we launched our first herbicide for the sugarcane industry, and then we launched a new insecticide all across the country. And personally, the leadership, myself and the ag business leadership from Singapore are pretty much present in there, supporting the teams to make sure that we have not just the investments in assets, but also the new product pipeline is fed with continuous improvement. You saw what we are doing with Panoli, where we are expanding the engineering plastics capacity. We just acquired this a year or so ago. We merged it into BIL, and already we are talking about expanding the capacity by 30%. So that's the first one. We will continue to see how the market goes and evaluating further the capacity needs. Naren talked about the 1% operational expenses. That's pretty much a focus area that while we invest in growth related activities, the expenses are under. So I clearly differentiate between investments and expenses. Expenses I'm a bit tight, investments I'm more okay as long as it is accretive from a top line and margin perspective. Working capital, I think to grow from 7,500 to 13,000 crores with only a small increase in working capital. It basically talks about the excellent job our procurement guys are doing, our finance guys are doing in negotiating also our purchase conditions and having sufficient credit lines in there. Now, customer, I can't but thank my sales teams and the technical service teams which have managed over the last 2 years to grow. Last year, Naren talked about it, we had an excess of 20% volume growth at a time where it was difficult to do projects with customers or come up with new products. And how do you do that when everything has to be done virtually? So our investments, and I don't think we are done with investments in digitalization, because we were a very old-fashioned company. The way we work, both at our plants as well as our offices, need to be upgraded for the new world that we are in. And I strongly think that will be a good differentiator for us. In terms of people, in these difficult times, the fact that we've been very supportive to our employees, both who are on our rolls, but also the ones who are indirectly working for us via contracts or via third-party arrangements. we've been pretty supportive to them during their challenging times, and we've been investing in various forms of training and development, and I think that has all helped us to achieve what we have, and I'm pretty optimistic that in the long term this will only further have positive development. Now, that said, in the short term, for the rest of the year, the political situation and what's happening in Europe will have consequences for the world, and including us here in India. I hope China somehow settles down, but even today I read that they are not going to let up. I mean, when they find things are okay, 15 days of no cases, they will open their neighborhood. Otherwise, they will lock down again. And they say that will be the case until the end of the year, is what I read in South China Morning Post. So the COVID-19 impact coming from China and its consequences on ASEAN and India in the terms of supply chains, broken supply chains, is going to be there. And that's something we will have to deal with. We talked about inflation and interest rates. I guess by the end of the year, when people see in the US interest rates of, I don't know, 6%, 5%, 6% interest rates, I don't know how the Christmas shopping or the Black Friday sale is going to be this year. And that, of course, has impact on going forward. I read an article which said that the net savings of the US has dropped virtually to zero. The forecast is it will be zero by the end of the year. And it's the largest market for most of the goods eventually. So there are some challenges up there, and which is why I think I tell my people in the company that we have to run a tight ship. We can't be caught sitting with high-priced inventories when things start going down in terms of pricing and so on. And yes, maybe sometimes we are cutting it fine to the edge, but I think that's a prudent way of running the business, keeping our costs under control, making sure that we don't indiscriminately invest into anything. There has to be a good business case for what we are doing. And I once again repeat, there have been supply chain disruptions, and I've seen slides presented by many of the peer companies in the country, and our reliability rates as measured by international supply chain standards is clearly significantly above what most people are having. Our customers are complaining about delays, not that customers are not complaining, but I believe they still come to us because we have lesser problems than the others. So there are problems for everyone, and how well you can manage it, how well you can manage the relationships with your customers is what is going to eventually make sure whether you win this or you struggle with it. That said, I'm still keeping my fingers crossed the rain comes in the next couple of days, because that's the next immediate trigger for all of us. My crop protection team is well prepared. All the products are out there in the market, and we don't have issues with supply chain there at this point in time. So we are well placed, and just hoping that the sowing season starts well, so that will be the next trigger for us. Thank you. I think that's the last slide we have, and open for any questions.
Thank you, Mohan. Thank you, Rohit. We'll start with the questions online. So, first speaker is Rohit Nagraj from MK Global Financial. Are you there? Okay. So the next one is Rohan Gupta from Edelweiss. Rohan?
Yeah. Hi, sir. Can you hear me?
Yes. Please go ahead.
Hi, sir. Good evening. And thanks for giving us the opportunity to ask the question. Sir, first is on this, a lot of volatility is emerging from China in terms of logistics, and also the way the raw material prices and the multiple shutdowns which China is facing on a very frequent way. Just wanted to understand that how the global markets are reacting towards that, how the BASF is positioned right now to take any advantage of the current situations, what is happening in China, what has happened in China actually last couple of years, and how we are placed to benefit of our chemical expertise over next 2 to 3 years in terms of capex, in terms of gaining markets where China was earlier supplier, and are we in position to replace some of the Chinese supplier over next 2 to 3 years? So in nutshell, are we preparing ourselves for the China plus one, which is the global wave right now? Are we preparing ourselves or seeing any large benefit coming out of that over next 2 to 3 years to 5 years?
Thanks, Rohan, for that question. So clearly, from a macroeconomic perspective, the China plus one is taking certain shape, but that plus one need not always be India. In many value chains, it is ending up in Indonesia or Thailand or Vietnam, and some of it is landing up in India as well. So saying generically that China plus one will always benefit India is not really true. But there are certain areas where we see some of our customers also trying to change their supply chains, whether it's in the pharma industry, whether it's in the ag API industry. You see a certain development in their capex, in their desire to go further backward integrate into their supply chains and thereby replace China. So this obviously does have some kind of influence on our product portfolio, and because we are at the end of the day, we are ingredient suppliers to many of these industries. The second thing I see is when it is consumer durables, I hope I'm saying that right. This supply chain also is, there is a fair amount of activity also from the government's Make in India perspective, which is having impact on the Indian industrial development scenario where there is demand for chemicals and materials. Clearly what you saw, what we presented, I mean, the engineering plastics in Panoli that we are investing in, and we do have capacities for certain other material sciences here as well. These are all an impact of what's happening in our downstream customers. And then obviously BASF is reviewing its portfolio and what we need to do, our capacities on a regular basis. And sometimes it's just a debottleneck that's sufficient. Sometimes there are bigger opportunities where we will obviously be open to consider a larger investment as well. Now, you just saw we doubled our capacity for dispersions, which obviously should be good for us for the next couple of years to sustain the growth in the market.
Thanks, sir. That's helpful. So, second question is on our Dahej plant ramp up, and we understand that it has taken a long time for to take this full utilization of that plant. I just wanted to get some more numbers crunching there, that what are the utilization level right now at our Dahej plant, and over next couple of years, what kind of capex visibility company has at the current level?
So, I mean, Dahej as a plant to say is difficult because it's a conglomeration of multiple plants. So both for dispersions and Celasto, we more or less were above 100%, which is why we expanded both of them in the last 1 year. So we started up the second line of Celasto last year, and now we are expanding, in the midst of startup of the expanded capacity of the dispersions line. So I think overall, Naren, if I'm not wrong,
70 to
70. I was going to say 70, but okay, 70 to 75% is where we are. And in a multi-product plant, once you reach about 80%, you are kind of full. Multi-product lines. So clearly the review of the various product lines, and which is where the two of the lines we have already expanded, and the others are also under consideration as and when required. We will be able to invest, and you can see we generate sufficient cash from our operations, which should also help us invest without taking on much debt.
Also, you didn't mention any absolute capex number cumulative over next 2 years. If you can just share that.
I don't usually give that number, and I don't think I have that number with me as well. Sorry.
sir, just last from my side, if I'm allowed.
Yeah.
There is a lot of demand or the shift in happening in a chemical industry toward the green chemistry. Many players and many customers are looking for the more cleaner and greener chemicals to replace the old age chemistries, and many small players are emerging with the multiple new chemistries which are much better and more efficient and more cleaner than earlier. BSF being one of the oldest company in a chemical chemistry globally, how do you see that that our portfolio shift is going to happen, or are we looking and this green chemistries to take a priority world over and even within our company also? And are we also looking a certain percentage of revenues to come from the green chemistries in over next 5 to 10 years? Do as a company, do we have any such thought on a strategy level, sir?
Yeah, thanks, Rohan, for that question. First of all, green chemistry per se has a very narrow definition in the context of sustainability. BASF is, we were the company which first came out with the sustainability and sustainable future, and our tagline is "We create chemistry for a sustainable future." In the last 30 years, our CO2 emissions have declined by almost 50 to 55%, while we have grown, and I'm talking BASF Group now, while our turnover has grown over fourfold. So how have we done this? We have done this with process optimization by using better integrated plants and having our Verbund, which is really highly efficient. So we have already done that until 2018 is the published number at BASF. And our CEO was, I think, the first chemical company who committed to a net zero by 2050 for BASF Group, of which the first 30% reduction will happen by 2030. Now we are well on course. We'll probably be ahead of time, but okay, I don't commit to that. But most likely we will be ahead of time. Now, what are we doing in there? The emissions from BASF, broadly, I can classify in 3 buckets. One is from the energy and utilities that we use. And if you've been following BASF, you can see that we've been signing big contracts with renewable power, whether it's windmills or solar parks, whether it's in the North Sea, in Europe, or in China in our brand new site where we've signed up 100% for renewable power. We are working on several projects which will also change the way we run our chemical processes, thereby significantly reducing our carbon footprint. We are the first company which actually has gone out into the market and offered the product carbon footprint for each one of our products. So our customers have full transparency as to what is the emission of each of our product coming from each of our sites. So are we committed to this? Not just committed. I think we are leading this initiative as BASF. Now, coming closer to home, in India, we don't have, our emissions are much lower than the overall BASF scope of things. But we too contribute. We've signed up for several new investments into solar parks, because for us, it's not just, if we take something from an existing project, it doesn't count for us. We need to be there to replace investments into fundamental technologies of coal or whatever by having new solar. So only when it's a new field do we get credit for it. So we've been doing that. Our steam boilers in both Dahej and Mangalore have been transitioned to biofuel boilers, which again has a positive impact. So is there a strategy at BASF to get to net zero? Yes. Are we going in that direction? Very much, and we are accelerating that to a large extent. I'm pretty confident that at the end of the day, we will be well respected in the industry for achieving our targets.
Thank you, sir. Thank you very much for all the elaborated answers. Thank you.
Thanks, Rohan. The next speaker is Mr. Surya Patra. Are you there?
Yeah, yes.
Yeah.
Yeah, can you hear me, sir?
Just also name your firm that you represent,
Yeah,
and then
this
the
is Surya
question.
Yeah, this is Surya Patra from Phillip Capital. Uh, my first question is on the overall margin profile, what it has been so far and what it can see going ahead. So, sir, last year we have seen the situation of a spread expansion during the first half and spread squeeze in the second half of the last year. But that has not really impacted much, or that has not brought any significant change to our margin profile. We remain still in the single-digit levels. So, what can take us to a or take our business to a kind of double-digit margin profile, and what initiatives that we are taking for that?
Okay. So firstly, when you look at our margin profile at a whole company level, you need to understand that 55% of my the turnover is traded goods, and I've mentioned that in our previous meetings as well. And traded goods have relatively low margins. On our manufacturing assets, I think we have healthy double-digit margins. Which is what you see then in our overall metrics, and you saw how the profitability has improved over the last years. A lot of it has come from improvement of margins in our own manufactured goods, and you see we are also selectively where we see opportunities expanding capacities there, which should then have a positive impact on the overall company.
Okay, just to add the polyamide business from Rhodia, what you have added and the expansion that you are taking there. So, what scope that you are anticipating there, and how could that be contributing incrementally to the overall value creation by BASF India, sir?
So, if I understand your question right, I mean, from the polyamide value chain, it has significant exposure to the automotive industry, and we are very much committed to the growth. We see opportunities to grow there, and which is where we thought it's a good idea to expand capacity. It's like I said before, the industry has not really grown in the last couple of years. It's been flat. However, we expect that automotive will grow. So our growth in the last couple of years has been market share gains. I think with the industry growing, we do need additional capacity. So currently we are expanding by about a third of the existing capacity, and then we will review again in a couple of years if we need to do further.
Okay. Just last one question about it is BASF being the leader of the global chemicals. So just wanted to have a sense of keeping things like this, the war situation, the supply shortage or the supply chain disruptions, or even the energy cost, logistic cost disturbances. So just wanted to have some sense about the FY23 outlook, particularly in terms of, let's say, volume, price outlook for the industry. I know that you have mentioned in your commentary that it is a difficult year going to be, but having seen 2 years of a consistent elevated pricing situation, obviously there is a kind of a volume erosion situation is already now into the system. So going ahead, how should one really look at it is price correction as well as volume erosion, and hence a kind of a bleak situation for the industry as a whole, or you would be the right person to comment on that?
Honestly speaking, I don't think anybody has any clue which way this is going. It's all a lot of speculation, a lot of theories around it, what can happen in the next year. But fundamentally, nobody knows. And the start of it is with oil price. If someone can tell me what the oil price is going to be in 6 months from now, then we can predict the rest of the things. But that itself is such an unpredictable that the entire value chains starting from there, it's difficult to guess. And which is why I said, running this company, that people ask me, so what are you going to do? I mean, you have to run a tight ship. I mean, someday if it falls, then you should not be caught unawares. And that's exactly what we can do in operating the company. Now, like whatever I hear or read in the newspapers points to the fact that the rest of this calendar year, so I mean, obviously the world operates in calendar years.
Yes.
The rest of this calendar year is going to be difficult from the political situation in Europe. It is going to be difficult in the context of inflation and central bank activities in the various markets. So these challenges will be there, and we simply have to run our companies efficiently to deal with it. Expecting anything better would not be wise.
Sure. Sure. Yeah. Thank you, sir.
Thanks. Mohan, we have one question from one of the equity advisors, Vipul Shah. And his question is, you mentioned about this, 55% merchandise business. When do you see the OMP basically increasing, or let's say, what is our strategy, let's say, on that perspective?
Yeah. So first of all, I'm not too sad about the fact that we have a few thousand crores of traded goods, because that's also positive in the context. Yes, the ratios look different, but at the end of the day, it's also good for us to contribute with some traded products. The question is very right in terms of manufacturing strategy. Now, the thing is, BASF with its wide portfolio typically would invest in a local asset when there is a critical mass for an economic world scale plant. So many of these products which we are importing, or in fact all the products that we import, are such where we don't have the critical mass in this country to put up a BASF globally economic size plant. And if you look at Indian chemical industry also, we have significant imports of many of the basic building blocks. And the reason for that is there is no sense in having a subscale plant, because you will not be globally competitive. Now, that said, I think things are changing. There is development in this country, and I see the demand for many of these products going up in the next years. So clearly the next 10-15 years, if you talk to DCPC, the department in the government, or Invest India, the outlook is positive, and I guess there will be triggers at various times where it will be positive for BASF to consider a local investment. But at this point of time, if we are trading a certain product from our group entities, it's simply because it doesn't make sense to manufacture it here.
We have the next speaker. This is Aman Shah. Mr. Shah, are you there?
Am I audible?
Yes, please. Could you state your firm name?
Yeah,
and then start.
Yeah. Thank you for the opportunity, sir. My name is Aman Shah, and I represent GT Investments. We are investors at BASF India. Sir, I had few questions. One is, we have seen tremendous better performance over the last 4 or 5 years in terms of revenue, margins, and working capital, given that we had changed our business model somewhere back. Where did we had the source of this growth in terms of volume also? It was new projects, new product you did allude to, but there would also be market share wins that we would have got this growth from. So if you can just highlight what was the source of such good growth in terms of volumes over the last 4 or 5 years.
Yeah, thank you, Mr. Shah. I can't name all of them because there were a number of projects in all my divisions. But for example, if it is crop protection, we introduced new products. We also increased our reach to the market by expanding our network in the market. We went digital. I think last year, Naren, if I'm not wrong, 85% of our ag orders came via digital channels. Clearly, this has helped us. If I look at automotive, practically every big name in the automotive industry, we've grown our shares. Again, they come up with different parts of the car where we have grown, whether it's in the materials, engineering, plastics, or in the polyurethane systems. We have grown in that area. In the appliances area, we've grown. In construction last year, we had several projects which was quite positive. In the agrochemical industry and the pharmaceutical industry, which has had reasonable growth, also the exporters from here. So our chemicals division do supply various building blocks to them. So that has also been a very positive development for us. So it's not just one item which has happened. It's been across the board, a large number of diversified products and projects which have delivered the growth. I hope that helps you a little bit.
Sure, sir. Sir, if we have to see, say, from mid to long term, from your as manufacturing grows in India, the share of manufacturing, should our volume growth also mirror, say, GDP by 1.5 or something like that, if you can?
I think there is no such correlation for a wider portfolio like BASF. I mean, I remember when I was a young chemist in the sales guy in the company, we had such correlations for polyolefins and polyester, but beyond that, it is very difficult to do that. So I wouldn't hazard a guess on what times GDP this would grow, because there's so many industries and it's difficult to guess.
Okay, okay. Sir, BASF Group as a whole is like in most of their products, around 70% of their product, they are top 3 in the world. In India also, I would say, like, since now we are also equivalent to our GDP share to world GDP, our BASF India's share to BASF is equivalent. What would be our, say, maybe market share in all the products are very different and very widespread, but market share range or some pecking order which you can give of our market positioning?
You see, again, it depends on how you see it. The chemical industry, as recorded by McKinsey's last report, I think in 19 or 20, they came up with the industry, and that's what Invest India shows all the time, that it's a 175 billion market, and they expect it to grow to 300 billion by 2025, I think is the number they give. We are what at as BASF India Limited, we are about 1.6 billion. So we are 1% of the chemical market, you can say. But again, we are not active in polyolefins. We are not active in PVC, polyester, or a large variety. So if you take the product lines where we are in, then we definitely have, with the exception of agro, where we are about 6% of the market. In most other cases, we would be in double-digit market shares.
Okay. Do we see, sir, like we had any white spaces or any vacuum spaces where we can bring further more product portfolios from BASF SE here?
We are evaluating that all the time, and it's something which would be strategic relevance to the company, so I can't be very open about it.
Okay. So just last question, if I may.
Yes, please.
Okay, thank you. So we have like our chemicals and material, if I'm not wrong, is very closer to that cracker plus 2 or cracker plus 3, what you say. If, say, crude oil prices are to go south, we'll obviously have inventory loss for a temporary period. But do we then also means, will it be a negative EBIT sort of number for that segments for a brief temporary period? Or
That's exactly what I said I'm working on, to make sure that, can you avoid it? You can't avoid it. If oil prices go down, not just me, the whole world will have to write down inventory. The question is how tight you run your ship to make sure that the losses are minimal. And how do you see, on the one hand, we have the supply chain disruptions, which tells me that I should increase inventory to have security of supplies. And then on the flip side, I have this issue that we are probably sitting on a cliff and we don't know when it's going to drop. So what do I do? So that's a fine balance we are playing more or less on a weekly, monthly basis, this discussion happens in the company as to do we buy the next parcel, do we not buy the next parcel, do we postpone it by a few weeks, what's going to happen. So it's a regular operational discussion that we have. And all I can tell you is we are running as tight a ship as possible. I mean, you saw the inventory charts which Naren showed. We were at 72 days, now we are at 58. Despite the supply chain disruptions, we've actually gone in the opposite direction. So why? Because we are not sure of what happens. So we don't want to be caught unawares. So we are running a very tight ship, and that's all we can do, because I also cannot go to zero, because then my customers would complain. So I think we are in a very optimal situation today. So let's keep our fingers crossed that we don't get a shock, and whatever happens is more gradual than a sudden shock one day.
Okay. Thank you so much, sir. All the best.
Thank you, Mr. Shah. Any questions from the room? Yeah, please.
So first question, sir, is we've had a fairly strong.
The mic so that.
Oh, sorry. So as you highlighted, sir, we've had a fairly strong FY22, and as I see it, first half was stronger than the second half. From a YOY growth perspective, both actually absolute numbers were good even in second half, but from a YOY growth, it looks like second half was a weaker number. And the question is, how is the demand environment today? Is the pricing power with you still, or are you unable to pass on all the raw material cost increases properly? When you say you aspire to deliver profitable growth, is it possible in this environment to do that?
That's exactly our endeavor. That's what we are trying to do all the time. Is it possible to have another growth like this under the right circumstances? Yes. In today's market, I think it's still at a stage where it's stable at a certain level. Yeah. What you saw in the first half of last year was this significant inventory gain coming from the steep rise in prices as well. So it's not just the drop that you also get the gain when the things go up. So we did benefit from that in the first half of last year. Now I think it stabilized a little bit in Q3 and Q4 of the financial year, and you see kind of a stability in those numbers. If demand holds good despite the whatever interest rates and so on, and so far I haven't seen anything in India which tells me that the demand is all collapsing all around me. It's still quite stable. There is demand. I don't see a reason why we can't have a reasonable performance this year as well.
Mm-hmm. And linked question to that is Surface Technologies. You had mentioned last time that you're working on some solutions to improve that. Are we there?
No, it's not over yet. It requires some discussions and negotiations, both on the end side, at the customer end, as well as the manufacturing side. So it's work in progress. It's not something I can fix in 4 weeks.
Okay. And so should we maybe to extend this question, second half, how much time do you think this segment will require for it to start showing maybe at least no losses?
You will see positive development. So you already saw a reduction in losses. So I already see a positive trend in there. To exactly predict which quarter it will turn around is difficult for me at this point in time, and it would be kind of forward looking as well.
Sure. On the nutrition and care segment, Q4, the performance looked quite good. Was it all because of inventory gain, or there was a genuine improvement in pricing power?
So there were two things. Firstly, the first year of COVID had a tremendous demand pool coming from everybody wanting to take multivitamins and supplements and using the excessive amount of sanitizers for everything. So firstly, the previous year was too good, because there was a sudden, I mean, if you take the year before that, it was a steep upward thing for nutrition and care. And then last year that moderated a little bit. So, and secondly, what happened is, and not just in India, worldwide pricing of vitamins actually went down. So yes, there was some downward effect of that as well. The point is, it is an area where we are reviewing what to do with nutrition in the context of what's our growth plans for nutrition. So that's, as a company, we are looking at it. On the care side, I think it's quite positive in the context of the demand side, and where there is issues on the care area is more on the feedstock, because they depend largely on fatty acids and fatty alcohols, which have natural sources, so palm oil, the different kind of these vegetable oils which go into, and there has been quite a bit of turmoil, some government interventions in some countries about export ban and stuff like that. So that has had implications on that value chain.
Okay. And just to clarify, when Mohan talked about inventory gain, it's not that we revalued our inventory and took the gain.
We bought lower and sold higher.
Yeah, that's what. Yeah, sure, understood. And on the first question that I asked, actually, the extension to that, on the material segment, Q1 last year was extraordinarily strong, and I get your answer. But you also have Celasto, which is now coming in this year, the increased capacity or double capacity. The question actually is that should we expect a material decline in that segment profitability because of the inventory gain that you had in first half of last year? But you have also, it will be balanced by Celasto, which is why I'm trying to ask.
Exactly, I can't tell you.
Sure.
What I can say is, from a demand perspective and a pricing perspective, we are in a healthy environment. What it will be exactly compared to previous year quarter, I can't say.
Sure. On at least if you can highlight capex for this year, FY23, if you have a number, or that also would not be sure.
Naren, do we have a number for that?
No. FY23.
23. So last year you did 120 crore is what I have. And just to repeat on this, demand environment as we speak continues to be strong enough for you to,
yes,
as you see it, across segments.
Across segments. I am yet to see any segment where people tell me that it's all bad and things are looking south. Not yet. So we have weekly reviews of our businesses, and still strong.
And the last question is on ag segment. What kind of pipeline would you have? You've launched two new products, but incrementally, what kind of pipeline, if you could highlight?
Similar. Every year we will have a couple of products, and they are all in various stages of registration and so on. So subject to receiving registrations, the intention is to broaden our portfolio from a product perspective, and also from a market perspective, widen our reach. So that is the two fundamental pillars of for us in the ag business.
Any weakness that you today have, or that you're trying to take care of from a product segment? Or
I mean, the fundamental question always in the ag for us has been rice and insecticide, which were portfolio weaknesses. And over the last 10 years, we've invested significant amount of research globally into those areas. I'm optimistic.
Okay.
Okay. So we have the next speaker online. This is Mr. Kunal Mehta from Balance Capital. Are you there, Mr. Kunal? Can you hear us?
Am I audible?
Yes.
Yeah.
So just a single question. I think you've already given quite a lot of insight on it. I just wanted to understand internally how you're thinking about this. So in a lot of last 2 years, a good portion of our profitability was driven by, improvements in margins and spreads across products, key products like MDI. So, any perspective on internally, how are you thinking about, you did mention in many different ways that spreads are now at least stabilized and they are not falling from here, and you are even mentioning the demand environment to be strong. So can we expect these levels of spreads at least for the next 3 to 4 months based on how you read the scenario?
That's the endeavor. I cannot comment on how it will be 3 to 4 months with the forward-looking restrictions I have. But that's clearly the endeavor to continue to deliver sustained profitable growth for the business.
Got it, sir. Got it. Thank you very much for the opportunity.
Thank you. The next speaker is Mr. S. Ramesh. Are you there?
And thank you very much. So my first thought is in terms of the agrochem business, how do you see the industry performing in India in terms of volume growth? Because we seem to have everything going well for us, particularly because the monsoon is favorable and the base last year was bad. How do you see the prospects for volume growth this year in India?
If I understood correctly, you are asking about the agrochemical and how I see the impact of monsoon and the growth. So the expectation is that we will have a pretty good monsoon this year. Also, the spread is expected to be reasonable, and as a consequence, practically every ag-chem company is positive about performance in India, or at least optimistic about the outlook for the next few months. But when we talk about the ag-chem industry in the country, we have to also understand that many of the players are highly dependent on exports as well, because they do have, unlike BASF is only in the domestic market from our results perspective. But many of my peers and competitors do have an export market as well. And here, I don't have a full view on how the global ag-chem market is working. But clearly, the Indian businesses are expected to be positive this year. And it is our intention to outperform the market average in the country.
So just taking that one step further, the industry has been concerned about the supply chain, the raw material inflation, as well as the ability to pass it on in the supply shortages. So how is the supply situation now in terms of the key inputs for the agrochem business? And how is the pricing power in terms of being able to pass on, given that crop prices are very healthy?
So I think for the season, we've done a fair amount of work in the context of, we did have challenges. There are some products where, by the time we got the registrations and then we could actually import the products, it was a very narrow time window, which was not very easy, even having to incur some cost of air freights for some of the things. So those kind of challenges have been there. But we are well prepared now for the season. So we expect that we will not come to you with the excuse that we had supply chain problems for our ag performance. And we are hopeful that the monsoon will do well. And now coming to the pricing of our products, so far we've been reasonable in increasing our prices in the market. There is focus on profitability there as well. I haven't heard of any situation or any local market where they are saying that the BASF pricing increase is so high that we will now switch to somebody else. So I haven't heard that so far.
Okay, so there was some press report saying that infestations are possibly not as good as it should be. So is it too early to take a call on the infestations, which actually drive the demand? You obviously need to have the humidity and the right atmospheric conditions. How do you see the action on the ground in terms of infestations?
That's what we all live on, no? The kind of infestations that happen. So I think the dry heat and the heat wave which happened before has its influence, of course. But that said, if I believe the forecast of the Met departments, I think we will see a reasonable growth of requirement of agrochemicals in the country.
So, if you look at your overall portfolio, there seems to be some traction in terms of your asset turn, the margins, and the ROCE. So, In terms of your future endeavor, is there any one or two segments where you see improved prospects in terms of the ability to deliver better returns on a portfolio basis, and how are you going to address the other weak links? Although the surface segment perhaps in terms of revenue is not on that big, how do you plan to address the losses that's kind of a drag on the overall portfolio returns?
Thanks for that question. Like we mentioned a little while ago, so the surface technology clearly is an area where even at the last meeting I did mention it's work in progress, and that clearly is a drag or has been a drag over the last couple of years on our results, and that's something which is occupying a fair amount of our management attention now to get that turned around. So clearly that's one area. And on the nutrition and care as well, we are not satisfied where we are, so we need to improve further on nutrition and care. I think the material segment has done fairly well in the last couple of years, and here it's about how do we build further on that and how do we grow both at a market perspective as well as our own footprint in the country. I think the chemical segment is doing fairly well, and not a lot of homework in that area. In the context of ag, it's about for us, how do we broaden our portfolio, how do we grow further in the market, and that's something which we've done consistently for the last 6 years. I think we were somewhere around 500 crores 6 years ago, and now we are at 1500 crores, and I just keep going with our well-established strategy and product portfolio pipeline to further deliver growth in the ag business. So I think each of the businesses have a clear thought process on ideas as to what is the room for improvement, and we will continue to deliver on that.
So if I may ask one last question on green chemistry and sustainable development, what are the kind of initiatives you're taking? How do you see that as an opportunity and a challenge in terms of the capex and management time and the ability to monetize that? And that's a key challenge, right? If you want to generate returns on your investments.
I wouldn't go on to the green chemistry side, like I mentioned to the previous colleague as well. It's about sustainability, which is a wider umbrella for BASF. And clearly we are committed to net zero by 2050 as a BASF group. We have a 30% reduction target by 2030, and I'm very sure in India we will achieve a 30% reduction well before that of our CO2 emissions. We are consistently improving our product portfolio in the context of our environmental footprint and providing transparency to our customers in the field of what are the carbon footprints of our products. And last but not the least, from a power and steam generation perspective, I think we are already in a very good shape. We are much better off even within the BASF group. India seems to have been an early adopter to both solar technology as well as bio-based fuels. So a combination of that has given us relatively a better footprint even within BASF group. And we'll continue to improve on this.
Thanks for that insight. Thank you very much. Wish you all the best and take care. Thank you.
Thank you.
Thank you. So we have one question also online, Mohan. The question is regarding the paint sector. And basically a lot of companies now, I mean, the last year was really good for the paint industry, and also we see a lot of investment coming in. So how do we see that portfolio within the BASF company here?
So, I mean, paint industry, clearly a lot of new entrants coming in. So whether it's the Grasim Group or JSW, and also JK wanting to get into paint industry. So one thing is there will definitely be competition amongst the paint companies. So they will have to fight Asian Paints, who's the market leader, clearly. And I also see that the paint industry will grow. And the quality of products will improve in the country. So there will be two effects that will be there for the paint industry. Multiple players will only increase the competitive environment in that segment. And if you look at the fact that we have just invested in a brand new asset capacity for dispersions, that essentially is with the view that the paint industry will grow, and which is why we have expanded capacities. And we will continuously review how that is happening and keep expanding either in Mangalore or in Dahej. So we have dispersion capacities at both places, depending upon where do we need it more, whether it's in the north or south of the country. So we have brilliant opportunities to do incremental expansions, which obviously are a lot better than doing a greenfield project.
Thanks, Mohan. The next speaker is Mr. Rohit Sinha from Sunida Securities. Are you there, Rohit? Are you able to hear us? Okay. Any question? Yes, please.
So, if you look at last 3 years, Mohan, and I clearly remember somewhere in 2019, you made a presentation somewhere at South Bombay about where do we stand and what your thoughts were at that point in time. And probably if I look at 3 years journey, there are more right ticks rather than something which is not so good. So two things, anything in last 2-3 years wherein you are disappointed, you think as a company BASF could have done much better and you would like to do it much better probably over next 3 years. First one. Second, aspirationally over next 3 years or 3 to 5 years from BASF's perspective, what will be your top 2-3 priorities in terms of where do you want to see BASF India 3 to 5 years down the line?
Oh, very forward-looking statements. I have to be careful how I answer this. I mean, it's appropriate you ask this question. Am I disappointed with something? No, I'm not. And I talk about that to my team. When I came here back in March 2019 and took over, I set out with a list of things to do. And you are right, most of those things are ticked in green. There are few probably which is borderline green, but it's more on the green side. Is there something where we could have done more? Yes, we could have done more in the context of our investments into digital infrastructure, into automation, not just in our offices, but also in our manufacturing sites. We need to improve on that to be competitive also going forward. We could have probably done more with customers, but I think I wanted to do more with customers, but COVID had its limitations that you couldn't. I don't believe that with the virtual environment you can do as much product development in the material space as you can. I mean, if it's an IT industry, financial services, you can probably make do with lifelong virtual. But in the material space where you need to touch and feel things, I mean, when you go to the automotive industry and you talk to them, whether it's about their seats, whether it's about their engine manifolds, they need to see it. Those engineers need to see it. So you can't do it virtually. So I think in the context of development of further initiatives with customers, I think we could have done more if our environment was more supportive. It wasn't because we cut back on resources, but that's one area where I think we have room to improve even going further. The last thing where we did this transition in the context of our services and how we work with our services. And here now re-looking at our overall infrastructure. I mean, our offices are old. It is not set up to work in the modern era. So these are areas where we will need to look at. I mean, when I talked about digitalization, it also, I mean, we have one video conferencing room for 600 people. Not okay. Yeah. So world has changed. And we need to evolve there. So there will be certain investments that we will need to make on the way we work. Our customers also need it. So it's something which we will have to do. And lastly, something which is very high on my agenda is improving the female participation in our workforce. BASF globally committed to a target of 30% of women in leadership by 2030. So we are at 9% odd. So we have actually, I was shocked when I looked at Asia Pacific ranking of India. At 9%, we were amongst the lowest. Even countries which were historically presumed to be male dominated in the chemical industry like Japan and Korea were significantly higher than us. So that's clearly an area where we need to work. I'm pleased to tell you that when I looked at the numbers, I am a numbers guy, so I know where is the problem. So the problem was everywhere, but it was more pronounced in our manufacturing sites. When I went and asked the question, oh, no women want to work in shifts, which is not true, because there are customers of mine which run all women shifts. And they do work night shifts as well. So it's about providing the infrastructure, the security that is required, and having the possibility for women to have careers in the company. So we have improved a little bit over the last couple of years. And I clearly believe that having diversity in the workforce is good for overall innovation, the way we work. And also, I see they are more progressive. So I believe in that. And also BASF has this target. So I think that's an area where we have to do more. And I can share other things with you. When we did not have facilities like washrooms in our plants for women, or, I mean, it's a chicken and egg thing. You assume that nobody is going to work. You don't create an infrastructure. And then you say, well, nobody comes here because... So again, it's an area where I think the country needs it as well. There are significant women engineers who are now graduating from schools, and as a company, we are committed to improving that.
Business-wise, your priorities next 3 to 5 years?
Doesn't change. I told you that in Feb 2020. Grow volumes, increase margins, reduce costs.
So that's a bit, I'm saying aspirationally. Right? Where would you like to see key differences to BASF India 3 to 5 years down the line, business-wise?
So again, I would like to be ahead of the market. So to grow faster than our markets and grow that profitably. But BASF is not a company where from one day to the other you will have a tremendous growth. Unless now we decide to invest in a cracker in this country, then that suddenly changes the order of magnitude. But other than that, it will be an organically growing company. We might do slightly better than the market. That's what the endeavor is. And I don't really go and give targets. I mean, these guys don't get any targets from me. Because somehow I believe doing that will probably limit them. So, because then I get into a negotiation discussion, the GDP is supposed to grow 6%, and like somebody asks 1.2% of GDP or 1.5. Last year, if I would have done that, I would have ended up at 9% growth. So I want to maximize. I don't want to limit them. So yes, is there a strategy? Where do I want to be in 5 years? Yes, I have a number in my mind, but I don't communicate it even to my team, because I don't want them to limit themselves to that or get into a negotiation with me that is too high, or nobody says it's too low. Whatever number you give, they will say it's too high. So I let them grow.
And how do you see BASF India in the overall context of BASF Group? I mean, 3 years back, we were probably not so relevant. Today, we are there, probably maybe reckoning. And say 3 years out, 5 years out, how do you see BASF India in global context?
I think the relative position of BASF India in the group will improve. It has already improved over the last 3 years. And I think that, a good measure for that, and I shared that in another forum recently, is that India is 3% of the world's chemical market. BASF in India is 3% of BASF Group. All my companies put together, not just a listed entity. So because when I take the overall, I have to take the joint ventures also into perspective. So we are representative as a company to India's share in the global chemical market. We are not disproportionately high. We are not low. And the fact is, from a portfolio perspective, if you see, I have another slide which I show people. As the GDP per capita in the country grows, I mean, today we are at around 2,000. The BASF's portfolio starts getting more and more relevant as this rises, because along with that comes disposable income, the quality of products. And once you reach where China is today, which is around $10,000 per capita, you talk a different league, because practically 80% of our portfolio becomes relevant. Whereas today, it's a much, which is why I have to trade a lot of goods. I can't manufacture here because I don't get the economies of scale to build a plant. Whereas in China, I have that with $10,000 per capita GDP.
Okay. And in the similar context, BASF China has a certain position in BASF Group. And last 2-3 years, we have seen a lot of geopolitical development. We have seen last quarter has been turbulent in that context as well. So do you see on a relative basis, keeping aside the per capita dynamics and the scale dynamics, on a relative basis, purely on geopolitical developments of last 2-3 years and what's happening in India in the context of local manufacturing, would BASF India be much more relevant going forward, directionally?
So let me answer that with asterisk, caveat, whatever you call it. Will India become more relevant than China? No. China is today 45% of the world's chemical market. It will grow to 50%. Exposure to China will only increase. And China has a very large domestic market. So we are not in exporting from, we export some small quantities out. 95% of the products we produce in China stays in China. Yeah. So will India become more relevant than China? Sorry.
That will not happen. Yeah.
Will the importance of India increase? Yes.
Okay. And where can we be, say, compared to, say, 3%, right? And directionally, would it be significant improvement over this?
The government says that by the end of this decade, they want to be at 5-6% of the world's chemical market.
But when you as a company's MD and when you as a board think about, BASF 5 years down the line, how will you go about this?
We have to have some basis, and I can only talk in public about what information is in public. I might have different assumptions, but the government says that they want to be 5% of the world's chemical market. So for all public speeches, it is 5% is the reference for me.
And last questions. We had tremendous improvement in the financial numbers that we have seen over the last couple of years. Do you think we have reached the optimal level, or do we still have some headroom in terms of improvement based on the kind of things that you mentioned that you are likely to do? Can we do much better than this, or this is like optimum and we'll be there somewhere near it? Some parts will be a little lower, some parts may be a little...
Yeah, again, I answer in a different way. When people ask me about BASF Group, I always say BASF Group is representative of the chemical industry. There will always be parts of the portfolio which will do well, and by definition, because we have 11 divisions, we will be average of the industry. So the endeavor in each one of those is to maximize the performance there. Now, that's how we run our business worldwide. Now, there are businesses in BASF Group which are at order of magnitude 8 to 10 billion. There are businesses in BASF where are 2 to 3 billion. Now, if the cycle is such that the 2 to 3 billion is on top and this 10 billion is down, then the overall things will go down. It's mathematical sense. And that will happen to us as well. If the material segment, which is our largest segment, happens to be in a positive development, then obviously things will be further better. But if the material segment goes down and surface technologies, which is 500 crores only, if that is the best business, then obviously the overall results will not look so good. So that's a problem with BASF as well. You have a multiple widespread portfolio which goes into practically every industry. Now, all the industries don't do well at the same time. That's a very rare occasion. So somehow there will be some averaging. The aspiration of the team is to be on the top of each one of those wherever they are. So be in the top 1 or 2 players in those individual segments.
But then at the aggregate level, is it possible, keeping current environment in mind and the current whatever we can visualize, is it possible that next 2 to 3 years can we do materially better than what we are today?
Define material.
But as in, say, whatever ROCs we have, whatever margins we have,
You're asking, 36% ROC, you ask me for more material improvement. That's a challenge, my friend. There are not many businesses who do that. Actually, let's be open. I can't tell you more. Do I want more? Yes, I'm greedy. I want more.
Okay.
Can I predict it? I can't.
Can you do more given the current environment?
That's the endeavor. It's like my salary. I always want more. I don't get it always, but I always do.
So we will see if Mr. Rohit is back. So
hello.
are you there?
So I'm
Yes,
sir.
Yes,
Yeah.
you are.
Yeah.
audible.
Sorry.
Go ahead.
Yeah, sorry. My line was facing some issue that time. So
No.
sorry again. As I joined a bit late, so maybe my question might have been answered earlier. So one thing, one question is on the our manufacturing and trading business ratio, which we were some time back we are also thinking about to increasing the manufacturing part. So does we still remain? I mean, will go with the same kind of ratio going forward as well, or would there be any? I mean, 3-5% kind of improvement we can expect in the manufacturing side, and if that would that be somehow helping our margin to improve?
Well, the thing is for me, both businesses are growing. So the ratios are not really changing too much. We are investing further into own manufacturing capacities, which ideally should have improved the ratios. But then our trading products are also growing at a similar rate. So the ratios are not changing, but the absolute numbers on both are increasing.
Okay. Okay. Secondly, on in our chemical business, uh, as I see in last 3-4 quarters, I mean gradually our I mean revenue contribution has been slightly going down. I mean in absolute number has come down from Q2 to Q3 then in Q4. So is that because of lower activity from the end user, or is there any other reason? Because prices have been on the higher side from I mean, especially in Q3 and Q4. So despite the prices being on the higher side, why the revenue has come down?
Okay, I will have to look at that. I thought overall chemicals revenue has gone up and not down. Now, overall, from the chemical perspective, what I can say is the demand is quite well, and I think it's growing. So demand is very much there. But the fact is that there have been in certain areas of that supply chain disruptions as well. So there have been delays in invoicing, the material availability, material being stuck in port. So those kind of topics have been there. But fundamentally, I think the chemicals business has been doing well the last couple of years.
Okay. Okay. And one last question. As we say that we are present in almost every industry, and obviously not all industry will perform well at the same time. So what we are seeing, I mean, going forward, I'm just asking that how do you see this FY23, and which maybe one or two industry you see would be having a better year for the as of now, or what you see in this FY23?
Okay. Again, crystal ball gazing, cannot predict too much. I think the first trigger for us is what happens with the monsoon and how does that impact the agricultural economy. The consequences of that would then be felt in FMCG and consumer durables. So that's what I'm looking for in Q3 and Q4, how that demand develops. The larger question, of course, with inflation, higher interest rates, is what happens to construction and automotive. The last year, I think, has been actually good for construction, both in terms of buildings as well as infrastructure. The expectation or the hope is also from the government perspective that we continue to invest in infrastructure and the demand for housing and commercial space improves, which also then triggers a number of other aspects of industry. But the first trigger, of course, is monsoon. If the monsoon does not do well, I think already the stress that you see in FMCG and consumer durables will start spreading.
Okay. And that's it from my side, sir. Thank you very much, and all the best.
Thank you. So, any further questions?
Just one, if I can ask.
Yes, please.
In the near term, because of China, COVID situation, and Europe and all, any supply disruption that can impact you? Is that do you have any sleepless nights over it, or is you're still managing it well?
We are managing it well. Not sleepless nights, but worried evenings. Yes. So it's not that serious yet. There is opportunity for it to become sleepless nights. The thing is, we do depend for certain raw materials and as well as products which we sell on imports, and both from an availability perspective and from an affordability perspective. These are topics, and at the moment, I don't see demand falling off, like I said, or customers unwilling to pay the current pricing levels. I don't see that, but I don't know how long that holds.
Okay, and a related question would be, let's say the way you answered in ag portfolio from a competitive pricing perspective, for your materials and other segment, are there competition where they are also taking the same price increases and hence competition is kind of reasonable from a profitability perspective, or are there any competition which is behaving irrationally as well?
I can't really talk about competition in this context. What I can say is that my demand for products, I mean, if my pricing was out of the whack and not really in line with the fundamentals of the market, so it's not commodity pricing where I put it on an exchange and somebody buys it. For us to get a price increase from, let's say, a Tata Motors or a Maruti Suzuki, sometimes you have to go 3 rounds of negotiations, and I'm very sure they are talking to our competitors and other possibilities and so on. So it's not been easy to get these price increases. So, and you have to explain what's my cost increase, why am I doing this, what's my outlook, how long will this last, can't you bear it for 1 or 2 months? I mean, that's always the question if it's short term. And these all questions we need to prepare and answer. So it's not been an easy ride increasing these prices. And I believe the industry has gone up. Otherwise, I mean, why would they buy from us anymore?
Sure.
So just taking from the first question of his, basically, I lost it. Sorry.
Okay, so maybe there's one question till the time you get to your question. There is this craze about electric vehicles right now, and of course we see the period. It's still at a very nascent stage. Where do you see this as a potential for BASF going forward?
So in the electric vehicle space in India,
yes,
globally we have already announced a few plans on battery materials. We are well positioned in Europe and in China and so on. In the context of India today, the government has announced the PLI scheme for advanced chemistry cells. We really don't have any cell manufacturers in the country, or it's not substantial enough. We assemble a few things here. And that is where, BASF in that ecosystem, we don't produce cells. We are only in the cathode aspect of the business. where there is an opportunity depending on how the industry develops. The PLI scheme essentially gives the cell manufacturers, I think, a 5-year term to localize 60% of their ingredients. And we've done the rough math on this. Without having a significant portion of the cathode manufactured in the country, you will not get to 60% of indigenization. Which then essentially means about critical mass, whether the market reaches critical mass in 5 years' time to indigenize something which is relevant for BASF. So that's something where we are having ongoing discussions with potential customers, also with the government. We are part of the committee which discusses these topics. Will India have a reasonable amount of electric vehicles? I think the forecast is order of magnitude 25% by 2030, which if you take today's numbers would be about 1 million cars as projection. So now we have to see what does that mean in the context of what will be done here, what will be imported as cells from abroad, and so on and so forth. Am I optimistic about it for the country? Yes.
Thanks, Mo.
So last time when there was a supply disruption, right, we had seen the share of organized players going up, and consequently we benefited out of it. Again, we are in a terrible supply situation at this point in time. So is it repeat of the last time wherein we are seeing organized sector benefit and consequently BASF benefit out of it?
I think when that happened in the first wave of COVID, many of the players didn't come back. I mean, these unorganized players in many of the industries, they got wiped out, many of them. So some of them did come back. It's not that nobody came back. So it changed a little bit. So some consolidation has happened in practically every industry that I can talk about. And I think it has reached a level where there is some amount of stability now. So now it's about how you grow with these people and whether you choose the right winners within that portfolio of customers and industry. So I think we are at a stage where we have done the initial shake-up. It's reached a kind of a steady state, and now again we will add growth, and probably then when there is growth, more people will come in and so on, and maybe in a few years there will be another round.
So we have one more speaker.
Yeah.
Online. Mr. Vipul Shah.
Hello. Am I audible?
Yes.
Yeah, so thank you for the opportunity. What I wanted to check with you, sir, is that we've seen very strong growth in the material side of our business. And in the opening slides, you alluded as well that in part of the business, you increased the manufacturing capacity as well. So what I wanted to check, sir, is that if you take the materials portion of the business, it is by far the dominant piece today as we speak, FY22, around about 3,500 crores in top line. How much of it would be, say, coming from our trading turnover? That is question one. And do you see any meaningful plan to have a higher share of manufacturing in this part of the business?
So I can't share at the moment the exact number of how much is trading in that segment. But what I can say is we are evaluating various capacity enhancement measures, both on the monomers part as well as the materials part of the segment. And like I already announced earlier, the polyamide expansion actually fits into that segment. A couple of other areas as well. I mean, Silasto we started last year, which also is not full yet, and I see potential to grow there. So the share of manufacturing will definitely increase. But that said, it was interesting in one of my discussions with the Bureau of Indian Standards. They were asking me, why don't you localize everything in this country? I said, I don't have the raw materials. In the end, I will import something into the country. At what stage I import and where it makes critical mass for me to have a line to produce a certain grade of product is the most important question. And people say polyurethane. Polyurethane is a type of chemistry which has got probably 1,000 variations in it. Everything I can't make in every place. So we are balancing that. So I think in the medium to long term, we will continue to invest in these areas. So whether it's polyamide, polyurethane chemistries. On the monomer side, like I mentioned, we are reviewing currently as well. So I'm actually optimistic about that segment.
If I may, sir, looking at, and this has been discussed earlier also, I think, in this session before. But my understanding, sir, and just wanted to check also with you, is that the supply to the paints industry predominantly forms part of our industrial solutions business. Looking at the explosive growth plans from some of the new players and serious players, if I may, in this segment, do you believe that there is a strong case for putting up new manufacturing facilities? Although we saw that earlier you mentioned that you've doubled your dispersion capacity in Dahej. But do you think looking ahead you may have to put up a couple of manufacturing units to cater to the these new companies plants which are coming up?
So at the end of the day, it depends upon how big the market grows. Now, if they take away share from their competitors, at the end of the day, it doesn't add in the dispersion volumes. So I believe it's largely dependent on how the construction industry grows. And in the construction industry, with the growth projections that we have, now whether it is the existing players or the newcomers that take share in that, I think we are well positioned with our capacities, both in Mangalore and Dahej. And like I mentioned before, for us it's about 18-month runway to get another line, for example. Yeah. So when we see that it needs another investment, of course we will further expand.
Thank you so much.
So any more questions online? Yes, please. Go ahead.
So from which country do we import our products?
So we have diversified imports. We have from Korea, we have from Germany, we have from Malaysia, Singapore, Antwerp, yeah, Germany and Antwerp, both, and some very little from the US as well.
So we have our manufacturing over there?
Yes.
Okay.
We have manufacturing all over the world.
Okay. So we are actually importing from our BASF only?
Correct. So we don't do third-party trading.
And sir, are you trying to demerge the business and going to list in the market for the benefit of shareholders?
You mean split the company?
Yeah.
No such thoughts have come across our minds.
Okay, good.
Thank you.
Any more questions in the room? Okay, good. So I think this was quite an informative session, Mohan. Thank you. Thanks, Naren, for all the presentation as well. So I request. So the presentation, I think, and the transcript, we will put it online after the meeting. And also request all your cooperation and support for our, our AGM is on the 3rd of August. So, your support and cooperation is always needed. Yeah. So thank you very much. And we see you again in November. this year for the next analyst meeting. Thank you.
Thank you. Thank you. Nice weekend to everyone. Thank you. Bye-bye.